Good evening and welcome to Mortgage Coffee Talk. My name is Tahir Qureshi. I'm a principal broker, license MO8002130 of Canada Express Mortgage Inc., license number 13241. Tonight, we are going to talk about mortgage fraud and how you understand them and how you can avoid them. It is very, very important for you to understand what is the definition of mortgage fraud and what are the obligations of the professional involved in transactions as well as consumer. What is mortgage fraud? Typically, when you receive an amount of money that you would have more than what you would have been permitted if application has been done honestly. That means if you have applied for a mortgage and you have done everything right, you will get a specific amount that you were entitled to. Unless you have falsified information on your mortgage application. This is very, very critical. You must understand that if you provide an application and information that you provide to the mortgage broker or the lender or the bank, they rely upon your information as an applicant, borrower. It goes to mortgage broker. As you know, we have a couple of channels we're going to talk about. The first is you go to the bank. Second channel is you go to the broker. They are licensed under Mortgage Brokers, Lenders and Administrators Act of 2006. It is regulated by Financial Services Regulatory Authority of Ontario. We call them FSRA since June 8, 2019. So that's a brokerage channel. You go to the bank lender. How this happens? It is a perceived idea that mostly people who are involved with the industry are somehow facilitating or cooperating to let this happen. There are tough penalties, punishment, and some may end up in jail. So this is very important. Have you heard about FinTrack? There is a law, Money Laundering and Terrorist Financing. Is called Proceed of Crime, Money Laundering and Terrorist Financing Act. We call them PCML, TFA. This is managed by FinTrack. FinTrack is a financial transaction and reporting analysis center of Canada, FinTrack, that controls the fraudulent and terrorist activities, and either you are a realtor, brokerage, developer. Since we are talking about in the context of real estate, we are mentioning about those names directly involved. So you have banks, you have mortgage brokers, you have real estate brokers and brokerages, lawyers, and private lenders. They are part and parcel with where potential exists. There are guidelines from FinTrack about dealing with those transactions and reporting requirement, and we'll talk about those as we progress. So what type of fraud are those? So one is called fraud for profit. That means those who commit type of mortgage fraud are often insiders. That means they are in the industries, and that involve that you are raising, showing the higher value on the agreement of purchase and sale than what the appraised value is, or appraiser collusion with other people is appreciating more value than the market value, and then mortgage brokers and blah, blah, blah. So reason is that the lender is relying on the information provided by the applicant. They also rely on the recommendation of the brokerage to verify those information. And that's why if you follow Mortgage Brokers, Lenders and Administrators Act of 2006, you will follow as guideline provided by FISRA. There's a lot of work. That is why if you have dealt with a mortgage broker, we will ask, know your client. This is very, very important, a process of a mortgage broker, that you must know your client. That means you get all the information, authenticate to make sure you are dealing with the right person. So when you are in a situation, if third party is involved, you need to find out more thing about it. If the money is coming cash, if more than 10,000, you have to report to FinTrack. If money coming from overseas through legitimate channel, then FinTrack probably knows, get the notification from the banks, because there is a process. Idea is to avoid money laundering and terrorist financing in Canada with it related to transaction. So now the other type of the fraud is called fraud for housing. This type of fraud is typically represented by illegal action taken by a borrower motivated to acquire or maintain ownership of a house. So whatever takes to get a house is the idea to breaking the law, falsifying or misrepresenting and fraudulently doing activities. So the borrower may, for example, misrepresent income. If you have an income, you have a T4. Or if you're a commission agent, you have a T4A. So income is a foundation, because the bank has to rely on your income to pay the debt that you are taking. Now, if you are giving the wrong information, then what will happen? You won't be able to pay the mortgage. At that situation, you will end up in trouble unless the intent is to have a fraudulent activity. So this is very, very important, that asset information. Sometimes people come to us, they want to buy another property, they show asset, they exaggerate the value of the asset to show more equity to borrow money from the bank. So if your information is provided and relied upon in certain circumstances, and it's not true, you took the more money from the bank more than you deserve, and that fall into fraud. Then if you have an application for a loan, an appraiser get involved and somehow he or she manipulate the information to appraise value of the property, because bank is relying upon the appraisal to rely on the true value of the property they are loaning the money. So you can see that how much impact it has on lender. Lender sometime may consider to get two appraisals from two different people and see what the value is depending on. And you have to remember that if loan to value ratio is less than 20, CMHC give you the guaranteed. You pay a fee and you are getting, a bank is getting the protection from the government. But when your loan to value ratio is over 20%, that is a conventional mortgage, the bank rely on appraisal because it provides them a satisfaction that the property is worth financing. So this is very important for you to understand that. Falsifying, so that means if you are able to get a higher appraisal, you will get more money. With one person giving a wrong appraisal can cause problem. So to maintain the integrity of the system, regulators give instructions, guidance, and education program because before the licensed professional to make sure everybody follow the law. But sometimes misrepresentation done by applicant and oversight was not done properly, it end up and getting the more money than they deserve, and that's where the problem is. So mortgage is a financial crime. Stealing money, somebody else's money for your personal gain. Because when loans documents are falsified and you profit from it. For example, you go out, do shopping, you need to buy something, most likely $50 or $100, you will be checking 3 places to check the value of the property. And whoever gives you the best deal, you will buy it. Same thing happened in mortgage. You go to the different mortgages, brokers and lenders and private lenders, depending on your need. But thing can happen that if you have, because when you go to the retail store, you're just picking up, you're relying on this big store to make sure the product you're buying is healthy, safe, and you already know the pricing, so it's competitive, and you buy it. But in your case, you are the one who's providing the information to the people who are involved in real estate. And I advise people to make sure when you enter into buying and selling real estate, talk about things. Last episode on Awaz Entertainment Realty Coffee Talk, I talk about the real estate investment challenges. And one of the topic was getting loan from the bank. In this case, loan could be bank or could be a credit union or a B lender or a private lender. It depends on the investment you're doing. Number 2 was saving. So you have to have a saving. They're working with a realtor, buying the process. So if you have missed that out, go to realtycoffeetalk.com and watch that program. It gives you good idea about process. Today we're talking about the process. Basically, falsifying the mortgage document, you are infringing on the mortgage legitimate process to take advantage. So you have a material misstatement. That means you are giving a statement that misrepresents. You are trying illegally to profit from it. If you have not presented something, but you have missed something, information, and which leads you to get more money because lender rely upon you, your information. Omission of information or application is also fall into mortgage fraud because lender is going to rely upon you. So this is because if you miss the information or you presented information that led them to approve your mortgage, you had influenced the decision-making process. So when you rely on, when a lender, bank, credit union, or private or B lender rely on making a decision based on information you provided, if this information is not correct, it is a mortgage fraud. So what type of, or sometimes this happens is that you have a distress owners. They, as you know, we have right now, lots of people have deferral payments. Lots of people have 6-month delay allowed by the bank. And now those who are still in that predicament where they cannot pay mortgage are vulnerable because lenders, banks, or anyone can take advantage of you now because you have been unfortunately in that predicament that you cannot move forward and you have not made any decision how to avoid the situation that happened because of pandemic. Nobody expected that, but at the end of the day, now if you have extended 6 months, unless government guidelines and your lender is allowing you to work with you, you will be reaching toward where you may default on your mortgage payment. So what type of mortgage fraud possible? One is called straw buyers. Straw buyers are loan applicants used by fraud perpetrators to obtain mortgages and used to disguise the true buyer. That means they take the mortgage, but they don't tell who the real buyer is. That means if you are buying a property, make sure you declare you are the buyer, but you are representing somebody else, third party. You're familiar with the FinTrack. When you are putting an offer, signing an offer, if you are a member of URIA, and you're practicing as a realtor, practicing in the province of Ontario, you have to complete a FinTrack form, individual identification information record. And we have URIA, Korea, and board disclosure forms. You're supposed to do that. So then it's up to you when you are talking to your client. I'm talking about in real estate. So make sure he or she is telling that this is the right buyer for this purpose. And you will know exactly true spirit of this transaction or nature of transaction. That means if there are other parties involved, if they're going to be in the part, then you have to make sure they are entered into an agreement or amendment is issued to the agreement of purchase and sale to include them. The other call is called an heir loan is a loan to a straw or non-existing buyer on a non-existing property. Property doesn't exist. Buyer doesn't exist. And the mortgage loan is approved. How this could happen? It happens. This is a mortgage fraud. It's called an heir loan. Loan is granted by a bank, lender. Private people, I tell you, they are pretty strict about, they won't give you your money. But this happened. This could happen. But It's a fraud, and we have to avoid that. The other thing is illegal property flipping occurs when property is purchased and resold quickly at an artificially inflated price using a fraudulently inflated appraisal. You buy the property and you flip it in a short period of time. And how can you show an increased value of the property and sell it very quickly with a higher appraisal so you can get a profit? So you're flipping the property. So this is very, very critical, that when you are buying and your intent are to flip the property, intent is expected that there could be a fraudulent component. It may not be the case. The potential is this, because when they close the property first time, they have appraisal. And then they sold it, they have a much higher. That means the person who sold the property was not properly represented. Under what circumstances the person who sold the property, unless they are party between the party and they're just taking the money from the bank, they're defrauding the bank with the money to get more loan, because prices of property normally doesn't go very high in a short period of time, very short period of time, because it takes time to establish market value, unless unless the circumstances as such that it needs to be investigated. People get in trouble by flipping the property if there is an element of fraud. Suspicions goes high. So those will be avoided. That means when you are thinking of buying a property for investment property, you have discussed your strategy with the real estate professional, real estate agent, or real estate broker. Because under TRESA, Trust in Real Estate Services Act 2019, now realtors are now real estate agent, real estate broker, agent, they're all agent. And also you can have a salesperson, a realtor, and broker and realtor, but the broker of record remains the same. As you know, I am a broker of record for City Pro Realty Inc. brokerage. Now Ponzi, the other type of is flipping. You understand that you don't flip, you plan it properly. Ponzi scheme, investment club or chunking scheme involved in sale of properties at artificially inflated prices, which as investment opportunities to naive real estate investors who are promised improbably high return and low risk. Well, Ponzi schemes are that where you can say, oh my God, this is amazing property, well, go ahead and buy it without doing your homework. And you attract those investors who have been educated about buying and selling and investing in real estate. So it's very, very important to understand that. And then you are hoping, you're promised that you're going to get a return on investment very high in a short period of time. Then you have to be thinking, putting a thinking cap. Is this real? What evidence document to support that analysis? You know, when people send to us application for mortgage, and being a principal broker of Canada Express Mortgage Inc., and also president and owner of Canada Express, City Pro Realty Inc. brokerage, I have the liberty to see through things quickly, analyze them, and I can make suggestions to clients that what is appropriate, what is not possible. You don't tell people information to attract them, misuse or misrepresent, because we have ethics and professionalism. And being a fellow of Real Estate Institute of Canada, a member of, I'm also CIPS, Certified Property Specialist. I am very strictly following law, whether you're dealing with Real Estate Business Broker Act as amended Trust and Real Estate Service Act, or proceed of crime, money laundering and terrorist financing acts, or we are dealing with mortgage brokers, lenders, and administrative act. Strictly follow law. Then you have peace of mind, nothing to worry about. Remember that if you have or someone influence people, bribe people to get the mortgage, and people who are involved with doing it without, if there is an audit and they get tracked, you all be penalized. And you want to avoid that. Idea is to meet professionals, get professional advice so that you do not make those mistakes. Again, when you are, there's other clause, is a builder bailout is when a seller pays large financial incentive to the buyer and facilitate inflated loan amount by increase the sale price. This we talked about before. Sometime a seller give you VTB back. And sometime buyer may ask you to inflate the price so you can do a down payment. Bank is not paying for that. You have to disclose that to the bank. You're buying a property, you're taking a kickback from the seller to use as a down payment without disclosing to the lender or the party involved. Because bank will only give you money what is the appraised value is of the property. Every lender has an approved list of appraiser who they qualify to do the appraisal. They do not accept any appraiser from outside. They have, each bank lender has approved their own appraisers, and you have to go to them, and they're big names, because when we did, I do transactions, and when they are pre-approved contingent upon mortgage appraisal, they will ask to select any of these list of people to secure a appraisal, and appraisal goes directly to the bank, paid by the buyer. So it has independent transparency. So this is why it's very important. Now here is, in short, sale fraud, where the perpetrator profits by concealing contingent transaction or falsifying material information, including the true value of the property, so the servicer cannot make an informed short sale decision. Basically, if you are trying to sell something quickly and nobody has enough time, sometimes private transaction take place. And that's where, if it's not arm's length, mostly bank will not, if this property, the buying and selling is not on MLS, they may not give you loan unless you borrow money on a high rate from a private lender. They take the risk and they give you a mortgage. So this is why it's very, very important. So why is it important to monitor these things? Sometimes reverse mortgage may lead to a fraud scheme. The perpetrator manipulates a senior citizen into obtaining a reverse mortgage loan and then pockets the senior victim's reverse mortgage loan proceeds. I am a certified senior real estate specialist dealing with 50 plus senior market We have a special training dealing with seniors. So I'm mortgage broker, principal broker, but also on the real estate side, I am a senior certified real estate specialist. So if you are a senior watching this program, and if you have any questions, please give me a call. My number is 905-785-9926. Or call my direct number 416-451-3489. I'd be happy to assist you. Now, there are reverse occupancy fraud. There's a term. A borrower buys a home as an investment property and lists rent proceed as an income to qualify for the mortgage. But then instead of renting the home, the borrower occupies the home as a primary residence. So there are various types of mortgage fraud available to people. When you are not in a position to buy a property, a real estate, you don't have an income to show. If you are seeking a mortgage that you know that you don't qualify, and you are going to areas where some people will accept or fabricate document to justify your income and get you a mortgage, it's a fraud. It's a criminal act that anybody who's involved will get in trouble. The key point basically is individual mortgage fraud scams or identify a theft and income asset falsification, while industry professionals may use appraisal fraud and air loans to dupe the system. The system is there to protect consumer illegal activity. So now some circumventing the system is fraud. They're going to break rules. They're going to break criminal act in falsifying it and get trouble. Sooner or later, they get caught. If sometime you might learn that somebody has bought properties and they're very significant value, million and up, and couple of properties, but when you look at their income, they don't have it. If you are a new immigrant or first-time home buyer and you brought some money from overseas, and this is your prime resident, and you put 35% down to buy it, maybe the income justification to verify may not be possible because you're a new immigrant, you brought a lot of money, and you have a piece of paper to justify this money came through the bank channel. But if you are buying repeat properties and you don't have an income, how you acquire those properties? Because most likely the property value has not been declared. Since 2016, I believe T1, if you're filing a personal tax return, you have to disclose all the properties that you have owned. So once you dispose of the property for profit, CRA will come after you, because investment property is treated differently, whereas matrimonial home, so far there is no capital gain or any tax on it. But the investment property is treated very differently. So it's very, very important. You need to be educated about it. Then is another type of fraud, the predatory lending activities. That means you are stuck. You bought a house, you're closing it, you don't have money that was supposed to come in from overseas or from the family or whatever, didn't come. Now you are stuck and you have to borrow from a private lender. Or they can charge you lots of broker fees, lender fees, and 8 to 10, 12% monthly rate. And that's called predatory lending activities. And sometimes you have a mortgage power of sales. Sometimes they can tell you this, they're going to help you to reduce your mortgage. They're scams. I tell you something right now. A client called me and he's paying a high mortgage. And based on the new rate coming up, he wanted to see, can I get a mortgage from a low rate? So he signed up for 5 years, so he's only passed 1 year. So I suggested to him, let's do the calculation. The reduction in mortgage rate produced certain amount, but the remaining 4 years, reducing interest rate from 3%, 3.09 to 1.67, 1.87, we did the calculation. It made no sense to break it because he has to pay the penalty for that. But somebody can tell you, by extending the amortization period from 25 years to 30 years may reduce your payment. But it's not the benefit. You're going to end up paying a lump sum penalty. So this is, sometimes people get into situation where they would end up paying more money than what they should be paying. So it's very, very important that you check about that you are not paying more than what you should be paying. This happens normally when there is a recession. And right now, COVID pandemic wave 2 is here. As you know, it's affecting us. It's affecting us. So we are very careful about what we can do and what we cannot do. If you go to FinTrack website, they give you special guidelines regarding real estate developers, brokers, and sale agent. What type to look for and what to report if there is a suspicious transaction. One of the things that I point out, and I learned from there, and I know that already, is that when you do a substantial renovation in a house, up to, you have seen some MLS listings, oh, it's $500,000 spent, 200,000 spent on the house, interior is brand new, 90% or more of the renovated property. CRA treat those properties as a new. When you put 90% of the interior is renovated or brand new. So this is why it's very, very important that you are not going into it. If you accept a property, the buyer has obligation to pay HST on it. This is very, very important. Similarly, whenever you buy a property, you go outside, you buy something, you pay HST. So when you have fully renovated property, if the buyer doesn't pay that taxes, then it will come, CRA will come after the seller. So this is why it's very, very important to understand the complexity involved when you are buying or selling real estate or getting a financing. So we as a mortgage brokerage, Canada Express Mortgage, we must have a complying officer responsible for implementation and oversight of the compliance program, that is the Money Laundering Terrorist Financing Act. And we have written policies and procedures that kept to date, approved by a senior officer. In my company, we are 2 people, and I am the only one who's active in mortgage, so other agent is inactive. And I have a policy book, policy and procedure manual. And we do risk assessment. Each time you change a mode of business, different type of transactions, you are required to do risk assessment. Every 3 months, 6 months, 12 months, you're hiring more people, then you have to do risk assessment to make sure that you are able to check to make sure there's no violation, there's no need for improvement of your policy and procedures. I'm a member of Canadian Mortgage Broker Association, CMBA, and we use their guidelines to help us to put together policy. It's a big, thick book that we follow because we're subject to inspection by FISRA. And then we also have to provide training to people, to employees, agent, other people who work on behalf of the brokerage. So that means we are trying to prevent. The purpose is to educate consumers so they understand and they are aware of challenges that we have and make sure you are making an educated choice. So these risk assessments are done and training is provided to mortgage agent. Because I'm a complying officer and if I have a couple of people, I'm responsible for their behavior, what they do in a consumer. So the government protects consumers. That's why they have, in mortgage, we have an education program, a registration program, and compliance programs. And of course, consumer protection program. That's why all these mortgage agent and brokerage have insurances. Apart from that, we still strictly follow code of ethics, professional, not only regulated ethic and morals, but professionally, and also when you seek a lot of designation, you have a higher standards. The goal is to provide a solution to your client so they are able to achieve success in buying and selling real estate and get their proper financing. In this case, we recommend competent professional to help you. If you are looking to look at the tax analysis, you look at the chartered accountant or CPA. He or she can help you how to file your tax return, whether it's a self-employee, T1 journal, T2 corporation, whatever profession you have. Use certified professional accountant, CPA, or chartered accountant. They can guide you on the tax matter. If you need a legal advice, talk to a lawyer, solicitor, and barrister. Give you legal advice. If you talk about real estate, you talk to real estate professional, real estate agent, real estate broker, or a broker of record like me. I'm a principal broker and of Canada Express Mortgage Inc. I'm also broker of record for City Pro Realty Inc. brokerage. I'm a FRI. You can see on the back of my scene, FRI, Fellow Real Estate Institute of Canada, on duty, helping you increase awareness and consumer trust in real estate and mortgage. So again, we're going to close this subject It's very, very important that to prevent a mortgage fraud, keep in mind, if you don't have income, you don't have a saving, it's a challenging for any broker or lender to get you the money. Because lender, we need to verify 2 years of tax notice of assessment, T4As or T4As or T4s. And then you need an employment letter, most recent employment letter if you're an employee. And you need to give 2 most recent pay stubs. And based on my experience, I did a couple of mortgages recently, in a couple of months, where the bank has asked me the letter date on the employment letter should not be more than 14 days. So as you know, OFSI rules, they are strict. They want to make sure the legitimate person eligible to qualify for a mortgage or loan apply and get the loan. To prevention, these regulations, policy and procedures, regulators are to prevent fraud. It does happen. It happens when you are so friendly. You think it's a business as usual. There are people who can do it. But it has to be an arm's length when you are submitting an application. No information is missing. You're not falsifying. You are providing true asset. As you know, when we pull the credit report, we already know where you have borrowed the money. If you have borrowed the money, and lots of people, they don't declare their income. That's against fraud. CRA come after you, Income Tax Act, you violating that. Sometimes people don't declare investment properties. They can get in trouble. Sometimes you buy a property for personal use, but then you rent it and you take the CRA rebate. CRA come after you. I recently have a call and I say, you better pay that money back because you rented the property. Even though circumstances were a little bit different, person was not married, and then she got married, and then end up paying. She was not doing a fraud. Her life changed, and the builder delayed construction, and she was able to get sympathy from CRA but it was a CRA. Whose money CRA is monitoring? It's our money, taxpayer money. They are working for us. Anytime you need any guidance in terms of taxing, I pick up the phone, I call CRA. They are so nice, generous. They guide you. I trust them. Anytime if you make mistake, you tell them this is a mistake and I'm correcting it. But when you file your tax return, it becomes evidence against you. Especially lots of people buying from builders as a principal residence, and they get the rebate, builder get the rebate, and then they rent it. There is an input tax credit. You pay the property, you pay this additional 24,000 to the builder, and you can rent the property, and then you apply it, you will get a rebate from the government. There's a system, but you need to deal with people who professionally know how to deal with the new construction if you are involved with that. I did quite a few Realty Coffee Talk show about buying from the builder, pre-construction homes, resale. So if you go to realtycoffeetalk.com and you can watch those episodes, they are very educational and you get be informed. At closing, I thank you very much for watching. I hope that this program gives you some perspective. What is mortgage fraud? Make story short, if you go through a process honestly, you will get certain amount of money. But if you modify that process or misguide the process by giving lack of information or falsifying the information to get a higher mortgage, is called mortgage fraud. Or if there is someone is flipping the property in a very short period of time and appraised value is exaggerated in a short period of time, there is a potential for fraud. So be careful when you're looking for a mortgage. Think about, put your thinking cap. All mortgages, brokerage agent, they have a moral and ethical responsibility and regulatory responsibility to report fraud to FinTrack. So if you are enticing someone to do something for you, you are breaking law. And someone who performed for you to falsify is also a fraudulent act against Mortgage Act. So be careful. And now I hope that you have some understanding and how we can avoid that. Provide your income document, true income document. Declare your asset correctly. Get appraisal from somebody. If you are refinancing or doing investment, get an appraisal. A professional give you an appraisal to rely upon for yourself making a decision. If you have saving, declare the saving. Provide copy of the statement. If it's a RSP or saving in account or GIC or tax saving account, provide evidence. When you're buying it, make sure you have a legitimate agreement of purchase and sale, which is the true value at the market value that you purchased. Sometime when you are bidding, it's possible that you may end up going above and beyond the assessed value or estimate assessed value of the property. Then you are responsible for any discrepancy between the purchase price and the assessed value by the bank. Sometimes, let's assume the price value is 50,000 difference. So you're going to pay from your pocket before you waive the condition to close that deal. So do not waive the conditions. Everybody's accommodating. Do not waive condition until you have a true, approved, fully commitment. Because sometimes you have to dispose of the property to get the money and then to buy it. And it's very, very important. Have a true value, proper assessment, so you are doing an arm's length protocol to get your financing. To avoid, if you are buying it for investment purpose, to make sure that you have a property that you are able to qualify. Anyone can go there and appraise the value and is consistent with what we've been appraised for. Because fraud does happen. Do not treat increase the value of, if you're doing a private deal, increase the value of the agreement purchase sale to give down payment to the buyer to buy your property above the market value. That is mortgage fraud. All those involved will get in trouble. So I hope that tonight program, Mortgage Coffee Talk, you have some idea and understanding about mortgage fraud and how you can avoid it. Thank you very much for watching. My name is Tahir Qureshi. I'm a principal broker of Canada Express Mortgage Inc. We are one-stop shop solution for your mortgage needs. If you have any questions, you want to learn more about our services, visit express-mortgage.ca or call me direct, 416-451-3489, or send me an email, Tahir at express-mortgage.ca. Thank you very much for watching. Until next Monday at 7 p.m., we'll talk about another subject. If you have any questions you want to ask, you can post your comments. Send me an email. What topic you want to discuss? You have issues. I'll be more than happy to assist you. Thank you very much for watching. May God bless you all. Be safe. May God bless Canada. Thank you.